While earnings season has just begun, it does seem like the bellwether this quarter is shaping up to be the financials, despite the sector's earlier chaos this year. For more, we're joined by Darrell, Cronk, Wells Fargo CIO of Wealth and Investment Management. And indeed, it has been really interesting how well the financials, let's leave Goldman aside for a moment, but how well they've done. And can we sort of extrapolate that out to the rest of earnings season at all?
I'd be careful probably about extrapolating it out. I think financials have exceeded. What I've had my eyes very closely on is both what Brian just referenced, which is the consumer and the trends. So the consumer has been resilient. The consumer always remains resilient into a slowing economy. In fact, the consumer is often the last one to kind of give up the ghost, if you will. They will spend right up to the edge of potentially a recession and jump right over the cliff into it. We're starting to see some of that in the numbers. So if you go back to the pandemic, huge amounts of transfer payments to consumers who built big savings balances. They've ground through those savings balances. Late last year, early this year, we saw big increases in credit card spending. And now just in the last month or two, credit card spending literally dried up. Like it went just dead silent, which is often a very late cycle indicator because it means the consumer's kind of hitting the wall, right? If they don't have the savings anymore to spend and they can't use the plastic, right, then they stop spending at some point. So I think it's a really important trend to watch. We're seeing in just this quarter's earnings, we're seeing credit card delinquencies rise from a very low level, but rise nonetheless. We're seeing auto delinquencies rise from a low level, but rise nonetheless. So there are some trends there that bear watching, I think, directionally, even though they're not at the normal magnitude you would expect in a late cycle event.
So I feel like that's kind of the glass empty or glass half empty side of the equation. Could it be though the glass half full side of the equation when you think about just the strength of the labor market backing up that spending that we're seeing? Sure, there's a little bit of tapering we are seeing, but again, it's not the magnitude that you would expect. In terms of like what we're seeing in the financials and how these banks are holding up. We're also not seeing massive outflows. What do you make of that?
Yeah, I think that's right, Diane. And I think we've got this air pocket of labor. Both firms have been resilient in not wanting to let go of their high-valued employees. But coming out of the pandemic, we had 10 million job openings and 6 million unemployed workers, right? We've never seen an environment like that where there was that big of a mismatch. So it's not surprising that labor has remained sticky. Now, I think what you have to parse there is it labor just being sticky and not rolling over, or is it that companies are robustly out there hiring today? We don't see the robust hiring side, call it the demand side of the equation. In fact, what you really need for that to kick in is you need earnings growth. And you need top line revenue growth, right? So we're going to be the second quarter in a row of negative earnings or revenue growth, third quarter of negative earnings growth, and the sixth quarter in a row where we've seen margins decline. So if that environment happens and demand comes down and your single biggest cost on your income statement is labor, you would expect that if it's typical to a normal cycle in the coming months, those layoffs would start to pick up a little bit. But you're right, the resiliency has been really strong.
But is it typical to a normal cycle? I mean, the thing that kind of comes around to me as we go through each earnings season, you know, we kept talking about normalization coming out of the pandemic. And then the conversation goes away, but really we're still there. I mean, when you talk about the credit card delinquencies, for example, they're ticking up, but they're still below where they were in 2019, which is remarkable to me. And it feels like there are all still these tension points in the economy that are not normal, whatever normal even means anymore.
That's true.
Right? So
you're right, Julie.
What is that process still like, and how difficult does it make your job and our job to try and figure out what's going to happen?
Very difficult, right? Because if you looked at a lot of the historical indicators and the fundamental indicators, you would basically say the economy is very late cycle and probably heading to a recession, which is why you had 70% of economists claiming coming into this year that the economy was going to go into a recession. That intense bed of liquidity that we just got done talking about probably extended the duration of how a number of those normally roll over and act. But at the end of the day, the consumer is the engine of the economy, right? And labor is what will matter there. What's interesting is, so we all know the Fed started hiking interest rates in March of 2022, right? Very first hike at 25 basis points. The unemployment rate in March of 2022 was 3.6%. The unemployment rate today is 3.6%,
yeah.
right? It hasn't moved, notwithstanding the Fed has increased interest rates 500 basis points, right? So does that mean labor is different this time, or this time is different? Maybe. Where you see strength in the economy, I think the important point here is you have to parse, is it supply push or demand pull? Because they're two different things. So think about, we've seen strength in labor, we've seen strength in housing, we've seen strength in travel and all those types of things. So take housing, for example. People aren't lining up to buy 2 and 3 new homes, right? That's not happening today, right? Why is housing strong? It's strong because there's such a supply dearth, right? There's only been 1% of homes turn over this year, right? Same thing with labor. There's a dearth of labor, right? It's not that companies are running out there to hire a whole bunch of new people. Same thing in travel, right? Airlines have done what? Cut the number of flights. So if you want to go to Europe, right, this summer, you're going to pay up because there aren't the seats there.
In that case, it feels like there's quite a lot of demand for travel, though, too.
There is. There's pent-up demand from the pandemic, right? Of people just wanting to get back out there and do their thing again. But it's kind of colliding with this reduction in supply of what's available for seats. If you go try to find a summer seat on an airline this summer, best of luck to you, right?
Yeah. Oh, whoa, wow. Okay, I have one more flight to get to.
Yes, okay. All right, sorry, Diane.
I better book that
You better get that
today.
booked.
Exactly.